Bitcoin's recent 11% flash crash puts it back under $60,000. The fear is once again extreme. We've got signs that the market is yet again resetting, preparing for the next big move. I'm sure you've seen it all before across YouTube. The next big move, the next breakout, what the hell is going on? Today, I want to explain what we're seeing in the traditional markets, looking at cryptos, Bitcoin, the stock markets, and the real estate cycle. Lots of price action, lots of moves to the upside at new all-time highs. More on that later in the video, but for now, hit the like button and subscribe if you haven't already. It is your home of the Peppy meme. I just read some of your comments yesterday. I thought that was pretty funny. Make sure you hit that like and subscribe button. Bitcoin flash crash is what I'm seeing over the last few days. It's what I'm hearing. So I thought I'd address that news of the flash crash. We've got liquidations to get through, market data, and as I said, new all-time highs that are showing up at this stage of the cycle, the winner's curse phase, the macro bull market. I don't say that lightly, and I know many are still fearful that these markets could collapse. Day after day, we hear the bad economic news announcements. So here's our agenda for today. Market data, real estate, stock market correction. NVDA has been a big one over the last 24 hours, and I dare say it'll be dropped off the radar in the next 24 hours. People will completely forget. So we'll spend only a very brief moment on it. Then we get into the deep stuff, Bitcoin, crypto, market sentiment and data, the price action of the flash crash. What does that mean for this current pattern of the price action for Bitcoin? USDT, an interesting one here of a potential breakdown, which is good news for the altcoins. We're going to look at ETH and Solana as well. There's a little bit of strength showing up here for one and a little bit of weakness in the other. Nothing too serious, but I think it's important to address at this stage with the choppy sideways action. And all of this could lead to an altcoin bounce. Some altcoins have bounced stronger than others. You know, that's a big one we look at. But let's just start with the market data. Now, the next big item on everyone's mind, the big one is interest rates. We've been talking about this all year, looking at the possibility that we wouldn't see any interest rate cuts. And so far, as we get towards September, this will be the longest pause that we've seen in many years. It's been over 12 months. So that call from January that we did here on the channel, absolutely 100% accurate, no cuts. Now we get towards September, and the market is expecting at least one cut, maybe two cuts. And that's it. You can see here would be the one cut, because right now we're at 5.5, and the two cuts would take you down to 5. And then the market expects a cut every single meeting until June of 2025. Obviously, we'll wait to see what actually happens, because what the market expects and what actually happens have been two very different things for over 12 months now. The market has expected cuts over and over again. And even if we get those cuts, it might not mean much to the market. This one, absolutely incredible. So nice data here from Seth again, and then also from the guys here at Compound News, looking at what happens with these interest rate cuts after the first cut going back to 1957. The main narrative here, and what we're trying to do, is play the market as best as we can, because what the media tells us and what other, I guess, talking heads out there generally say is once you start getting the cuts, the market is going to crash. I'm sure you've heard it more than once already, and I've definitely heard it many, many times, that when you start to get cuts, they expect the market to collapse. It's entirely incorrect. Entirely incorrect. Now, I've done it on the channel here several times, looking at the interest rate data overlaid with the S&P 500 price, because that's what you trade. That's where you invest your money. You invest it in the price of the underlying asset. That could be the S&P, could be a stock, could be whatever, right? But you are trading price. You're not trading these idiots that talk about why the market must crash. To the data, what happens after first rate cut since 1957? You know, if you are a regular on the channel, I love to go back decades upon decades, as much data as we possibly can. I don't look short term. Short term is very short, like 1 year, 5 years. Sometimes that's not even enough. You pretty much want to look at least through one cycle, and one cycle is roughly 18 to 20 years. I know it sounds like a lot, but if you want to get the results that most people don't get, then you got to do the work. So let's do the work here. 12 months forward from the first rate cut, the S&P is higher 18 out of 22 times, or 82% of the time. So 12 months forward, we're longer term traders here. the first rate cut, S&P is going to be higher 18 out of 22 times. Now, yes, 4 of those times, 18% of the time, it's not. So if you want to bet on that, it's up to you. Go for gold. It could happen, right? 1 out of 5 times, maybe it doesn't happen. If no recession, so if we don't see a recession over the next 12 or so months, the drawdown is negative 4%. So that doesn't mean that you end up lower at the end of the 12 months. It just means within that 12-month period, you might see a 4% drawdown and then it ends higher. As it said here, 18 out of 22 times. A drawdown is essentially from the time of the signal, and this is what we're looking at in terms of the signal, and to the and that is to the lowest point of the move to the downside. So it's saying here if there is no recession, then the drawdown is negative 4%. If there is a recession, negative 16%. So something to be concerned about there. Average gain without recession, 11%. Average gain, yes again with a recession is 8%. So the market can still go up with a recession. We talked about this all year. Germany had a technical recession. They're at new all-time highs. The UK had a technical recession. Their stock market also pushed to new all-time highs. So this worrying about a recession is pretty ridiculous in my opinion, and how I like to trade the markets. Eventually, you will get a severe recession like you had in 2008, like we've had in the mid-70s, like there was in the early 80s, and you still see drawdowns. Eventually, the market goes back high. So it just really depends on the time frame that you're looking at here with the markets. Are you short-term trading or are you longer-term trading? And if you are longer-term trading, then the stats stack up on your side. So let's move across to the market sentiment. So I've looked at some market data. We'll get to the real estate in a second. We've got the stock market. The market sentiment for the S&P 500 still at neutral. So we're seeing a significant reset here of the market sentiment. It's been several months now of the fear and greed index dropping to fear, dropping to extreme fear, and then basically hanging out in neutral. Sure, you could throw in a little bit of greed here and there, but as you can see, well, I've drawn the box. The box is sitting in neutral. So the market sentiment seems to be on its path to resetting. Along with that, just looking at the CPI for Australia that just came out, so a quick one for the Aussies here, we have dropped now from 3.8 to 3.5. And with these sort of numbers, that could eventually lead to an interest rate cut. And at the beginning of the year, I also said that we wouldn't see an interest rate cut here in Australia. We're sitting at 4.35%. And it seems pretty ridiculous that they would want to cut the interest rates considering the inflation was still at 3.5 to 4%. It's just way too close. You'd probably expect an interest rate rise before you saw a cut. So never believe what the news is telling you. Just look at the data for yourself and try to remove that emotion and what you hope happens to what seems more realistic considering the circumstances. Considering these circumstances, back to America, looking at the National Home Price Index, CoreLogic, Case Shiller here. The data just came out this week. June hit a new all-time high. In Australia, we're at also new all-time high prices for our real estate market. The housing continues up. I know there's about 30% of you from Australia that watch the channel, and that continues up. You may have recalled from years gone by, 2020, 2021, 2022, we were told by all of the Australian experts that the market was supposed to collapse, that even the banks said the property prices had to come down 30% during COVID. They had to come back down 30% or 40% during 2022 when there was fears of more recession and inflation and all that sort of stuff. And it's done the opposite. It's done the opposite in the US as well. Now, that's not for every single area. Plenty of areas in the US have not gone up. An example for Australia has been Melbourne, has been basically flatlining and in some areas also declining. But if we're still on this path to the end of the cycle, end of the winner's curse phase, we might see a last ditch attempt by some of the laggards and leading attempts by, well, the leading cities also continuing higher in the National Home Price Index for the US and for Australia. So just make sure you understand which cities are moving, which ones are the leaders versus which ones are the laggards. It's the same analysis that we use for altcoins and that you should be using for your real estate portfolios. It's exactly the same thing. It's humans are in both markets. They're going to try and chase some of the laggards, and those laggards might not work out as well, not give you those returns as well as the leaders. Winner's curse phase essentially means we're coming towards the end. But before we get to the end, you can call it a boom, you can call it an everything bubble, you can call it a blow off top, and you can call it any one of those things, and we get this nice strong move to the upside. Now, Don't pay too much attention to where this low exactly hits and where these other previous tops were. The main thing we're focused on here is the movement itself. It comes up for roughly 7 years, down within that period, up for another roughly 7 years, and then down for a longer period of time until the cycle starts again. That's what you're focused on here when it comes to the actual flow of the cycle. This is a time to be in a bull market. This is a time to be in that bear market. Speaking of a short-term correction, very, very short-term at this point for the S&P 500, very significant move to the upside that we've seen so far. S&P 500 here, basically the correction to the downside where we would see some significant price support to remain in a strong position on the short term, 5,400 points. Day after day, it hasn't come back to that level yet. That's about 3% away from current market action. Now, on this correction, if that level was to give way, there's still a price support level at the previous tops and, more importantly, the previous lows, because they're the longer term pivot points. You throw it onto a monthly chart or even a weekly chart, you can see the low here comes in at 49.50, basically 5,000 points, and the previous old all-time high sits at about 4,800 points. So you'd need to see a significant breakdown under these levels to invalidate the macro bull market and then confirm the possible beginning of a macro bear market. We're nowhere near that at this point. So the current reset of the market sentiment has stemmed from the TIA, 3-day down signal on the S&P 500. I did a video on this back in July. So this is that middle part of July. You had your red, red, and red from a key top. Don't try and use this anywhere else within the mix. It's from very key turning points, whether they're lows like here, you got 3 days up, and that sparked that huge move to the upside, or from tops like here or here, and the signal showed up here in mid-July, which then sparked the move to the downside and has led to an extended correction under the all-time high. That's all I was saying back here in that video. You can find that on the channel, talking about it live at the time. It's people ask to know what's happening next. No one knows for sure what's happening next, but we're just looking at the probabilities based on the signals we see on the chart, and some of those signals do very, very well. We go into great detail to educate our members on how you can use these signals for your trading and investing, whether you're short-term trading, you're longer-term trading, maybe longer-term investing. You can use them across any chart, stock market, stock indices, cryptos, Bitcoin. Link to this is in the video description. TIA Premium, the place to go. Otherwise, subscribe to the free Crypto and Economic Report and give it a bit of a taster. Absolutely free. The report comes out once a week. So that's what we were talking about here at those peaks. And this came in for Bitcoin as well. So for the correction to the downside, we've talked about those moves. You can see there is a possible 3% to the 50% level, and then a possible 8% to those lows. I'm not saying it's going to get there, but you can see how far the market would have to fall to at least test the lows and then fall further to start to invalidate the short and medium term trends. For now, everything is rosy, and that has also played out with the NVDA earnings call. As I said in the agenda here, we're looking at NVIDIA, wall of worry. The earnings came out and they beat expectations everywhere across the board. Revenue, net income, diluted EPS, net profit margin, operating income, etc., right? But when you see news headlines, they say that NVIDIA stock down after hours despite Q2 earnings beat and raise. And so the reason I don't like to use earnings to try and trade from is because one day they could be positive. You've got earnings that are going up, and then the next time you see the same deal, earnings are also going up. They've got great reports. Well, now it seemed bearish because it wasn't as strong as everyone expected. They wanted to see it stronger. And so that then shoots the price down. People start to get a little bit worried that they're not going to be as strong as they were in the last quarter, even though they're still up, they're still earning. And after hours, they're down here at around $17. The main thing to do here is just follow the chart. Now, what I want to do is look at the pattern here from the top to the previous top. And some of you can eyeball this and see that the volatility is also increasing, but the patterns remain very, very similar. Look at how I apply that there. Tops and a lower top, and then a crash right here, top and a lower top, and then a crash, and then a recovery. And at the moment, it's at this stage. So far, that has repeated exactly the same. Does it continue on? Obviously, anyone's guess. maybe this comes a little bit further. Maybe it comes back to test some of these levels. But you're just looking at the trend of the market, the fear that gets involved at certain times and then is able to be wiped out, talking about resetting market sentiment, and then continues higher, right? So I think this will eventually continue higher. Where does it end up at the lower end? Well, currently it's at 117, and you've got some levels back at about 100 and the previous low here at around 90 to assess whether there is an invalidation in this particular pattern. Otherwise, it's all just a pullback on fear. It's all a pullback for the wall of worry, and then eventually starts to continue higher. The VIX is another great place to have a look at whether we're still in this macro trend. We just saw a massive spike on the VIX, so the volatility index. Yen carry trade fear, that was basically the low. Surprise, surprise, market freaks out. It is a low, and then it bounces back pretty damn hard, right? So we got the Japanese carry trade yen. Now it's spiked up here, back down into the bull market, my bull market zone, 11 to 17. That's what I've labeled this here. And then all I've done is just copy this exact movement price pattern here and just reduced it a little bit because the spike wasn't as large as the COVID spike, which is fine. And the volatility would potentially play out something like this. So maybe we do start to see some more moves to the downside, which would then spike the volatility, like you can see with this top and these tops and these tops and so on and so forth, right? Until it ends up back into the bull market zone, like it's done here, like it's done here and here, so on and so forth. You can take this all the way back to the beginning of its chart. Big spikes, then smaller spikes that lead into this bull market zone. So I'm not seeing anything change here in the longer term for the S&P 500, for the NASDAQ, for the stock markets. You can see we're seeing some corrections again after a pretty significant move to the upside. But with these corrections will come some more fear, and that resets the market, like you can see here back on the fear and greed index. So that's a good place to look at Bitcoin and cryptos also resetting the market sentiment. So we've gone through the macro data, we've looked at the traditional markets. The real estate market, which is the most important, is at a new all-time high again for June. Don't forget that, it's at a new all-time high. And so we get to Bitcoin and cryptos here back in the fear zone. Again, looks like it's at a resetting stage. If we take a look here at a year out, it's always a good place to reset. So we'll put the max on here, and it's a good place to reset. Looking at Bitcoin with the crypto fear and greed index, this comes up a lot at many of these lows. I think this is a better chart to look at here. I've potentially labeled a few of those. Yep, right through the bottoms here, more through the bottoms, and you've got a reset in the fear and extreme fear zone. So a reset of the price action after extreme greed has to come back down, and a nice reset. Another reset here because it got quite greedy quite quickly. Boom, pulls back, and then you run up into this final peak. So that move was roughly over 5 to 6 months there, going from May into November. Again, you've got the reset, you've got extreme fear at the June low, another reset here in fear, and then a final reset in the FTX collapse. And then, well, the market does its thing. You see the greed start to creep back into the market. And only now have we really reset the market sentiment. For a long time, Bitcoin had not gone back and not fallen back into the fearful zone. It had touched on neutral. It hadn't gone back into the extreme fear, I should say, but it had touched a bit in the orange. Yep, you can see here for a little while, but it remained above that in neutral to greed for quite a lot of this move. So this move all the way up to 74,000. So this, at least in my opinion and my analysis, is a good looking market reset that has now taken the good part of 5 months. You can see we're into our 168th day under the all-time high after our 3-day down rule came in. It's the same thing that I just talked about when we looked at the S&P 500. This signal at the top, red, 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 in a row, lower highs, lower lows, very strong signal. Also happened for BTC. Red, 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 lower highs, lower lows, most importantly, because this one here was green, but it was a lower high, lower low. So now we're at the end stage of this 5 months. It's good to see that many have given up. The interest is quite low. The volumes are lacking compared to where we were in February and March. They're all the things you want to see for a reset of prices. The liquidity has also been reset again. That was from Tuesday, actually. You can see here there was $281 million of longs get liquidated, and a total on that day of about $310 million. So a good amount of liquidity to reset the market sentiment, basically flush out the leverage. You had a lot of longs expecting higher prices faster. Didn't happen. They got flushed out. So that brings us to the present time. Present time for BTC. Fear and greed looking absolutely good. To the downside, the support here is roughly around that $56,000 level. Now I've got 56. It's a previous swing, it's important swing low here from May. It's a key 50% level using the 2024 range. So that's the low of the ETF to the all-time high. Split it in half, you get 56,200. And the current range from the crash in August, the flash crash, to the top, 50% down is 57,000. So you got this nice mid-50s level for a potential support zone. So we're just above that now. Now we're also seeing some volume come in here. You got the nice support there at 58K. There's always a possibility of move to the downside, but just keep an eye on the significant levels here. 49K, and should it break down from 56, you want to see the closes back above that level relatively soon. So if it breaks down on the daily, probably at least the following day or two, you want to see that close back above the support level, which might become resistance if it doesn't. Now this is looking reminiscent of the last couple of times. I posted about this to our free Discord. You can find a link to that in the video description here. Just subscribe to the weekly report and you'll get an email that gives you a link to the free Discord. I put updates in there if I don't get to update you guys on YouTube, so it's a good place to follow. And you can see a lot of these fake outs. Fake out to the upside, fake out to the downside, taking out all those swing bottoms, a turnaround here, a fake out because it came back down, tested those levels, another fake out, another test here, and then you start to see a lot of higher lows, higher lows, higher lows. And right around this time as it broke out, you had your big names telling you that it was time to short the market. So the patterns are looking quite reminiscent to me of these last two accumulation zones where you've got some tests to the upside like we just had, basically faked out to the up. Maybe we see a fake out to the downside and then back in this zone. So to the agenda, we've covered the market data, the real estate tops, the stock market, NVDA, Bitcoin and crypto market sentiment and the data there, and then also the price analysis of the flash crash and what I think the price action could look like over the coming weeks, right? And where the strength and weaknesses lie. Now I've got these last couple to do. If this works out, then I would expect to see an altcoin bounce in Q4. This is basically the reset. I say Q4, let's wait and see what the charts say, but I'd say later this year around that sort of election or after that election. So in terms of the exact timing, I'm leaving it till Q4, but I think these two are really important right now. USDT and where the majors are sitting. This is the USDT dominance chart, but it's inverse. If you're interested in your technical analysis, which direction do you think this should be going in next? Do you think we're going to see a breakout of these tops as it has potentially hit some support and you'd start to see a breakout here? If that's the case, you can see that it's inverse, which would mean the USDT dominance would actually drop, which means where does that money go? Well, it either gets pulled out of the market entirely into profits and the whole thing's over, or it's going back into Bitcoin and cryptocurrencies, which leads to the altcoin bounce back. When does that happen? That's the next question. That's why I'm looking out towards Q4, as this is the reset time and then the breakout later Q4, maybe even Q1, but I think it might happen a little sooner than that. I have to wait and see. The main thing is if you just follow the chart, it doesn't matter exactly when that timing is, because when the signal gives, the breakout hits, maybe it's next week, well then you're in. It doesn't necessarily matter to wait for that exact time. You just want to keep following the chart. If we invert it again back to the normal way around, take these levels off, you can see that it has hit 50% a couple of times now. If it's used to the right to the top here, it's dead on the 50% level at 6.6%. So if this chart is going up, then Bitcoin and alts are going down. And that's what we've seen over the last few months. If it is going down, like it did through here, then Bitcoin and alts were going up, just like it did from October into March. So right now it's getting a bit of a hit at the major 50% level. And if it is to break down back under the 50%, that would be a pretty significant sign that the USDT dominance is giving way to more of that money flowing out into Bitcoin and altcoins. Speaking of which, here is Ethereum, the largest of the, well, considered altcoins, I guess. 2,500, a breakdown under, and then yesterday closed just above. Short-term analysis, looking okay because of that break above and then back above all of these previous lows. So that's the short term. The longer term still definitely needs a close above $2,900. So for the strength, if you're a little bit less inclined to take the riskier trade, the $2,900 level is the safer place. Otherwise, you've got a shorter term strength here with the daily close above 2,500, so a key 50% level. 2,500 is right through the middle here of the major level here of the bull market. Let's get rid of that, it's not necessary. And the 2,900 is the safer level. Solana, on the other hand, keeps getting rejected at 50% at $160. It is just the correction 50% level, but still an important one to watch. The main hope here for Solana is that it's still above the major bear market 50% level. So that's $134. So even though it's getting rejected at 50, it's basically playing this choppy game because there is still no clear direction for Solana. It keeps putting in lower highs and lower and higher lows on a broader time frame here. So if you wanted to get quite granular, that's essentially what's going on. It's basically just getting into this choppy range until there is a decision made here. What I think is going to happen is a decision made by Bitcoin to lead the charge again, and then Solana might start to play ball to the upside. Otherwise, you're still in danger of testing some of these lower prices. So a look at the bull market range from the $8 to 210, 109. So it's still above that 50% level as well. It's above two longer term, bigger time frame 50% levels, and it's below the shorter term 50% level. So here's the low to that current top, 152, and then also to this entire range here is 160. So good news is it's above those. The bad news is it still hasn't broken and held above 160 for some time. Like and subscribe. Links in the video description for our free crypto and economic report and also the free Discord over there where you can get the updates when I'm not making videos here on YouTube. Thanks again for your time and attention. I'll see you guys back at the next video. Let me know in the comments section what you are looking at here while Bitcoin hangs on to 59K. Which alts are you liking the look of? Or are you still in that camp that you think it's over? Do you think this is not the reset that I've talked about here on the channel? Very happy to hear your thoughts. Comment down below. I'll see you guys at the next video. Till then, take care and peace out.